Hello, everyone. My name is Zulfiqar. Welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. Investors love real estate investment trusts, or REITs for short, because they legally have to distribute 90% of their taxable income to shareholders in form of dividends. This can result in some of the most reliable high-yield dividends on Wall Street. At the same time, REITs have to borrow a lot of money to grow their operations, and high interest rates make borrowing and servicing debt more costly. Interest rates have come down a little bit, but not as quickly as some had hoped previously. However, that could change. A new Fed chair will likely replace Jerome Powell in May of 2026 and will, in all likelihood, want to lower interest rates just like President Trump does. And that would be good for capital incentive businesses like REITs. One beaten down REIT with growing dividend payout to put on your radar is Community Healthcare Trust, Inc. They're traded on New York Stock Exchange under symbol CHCT. John, what can you tell us about this REIT?
Well, it's fair to say that in general, healthcare REITs took a beating during the 2020 health crisis. Healthcare facilities were forced to deal with lower occupancy rates and higher costs associated with evolving protocols to spread the limit of the pandemic. Community Healthcare Trust saw its stock nosedive, along with the rest of the market in early 2020, but rebounded fairly quickly, erasing those losses by October 2020. And in May of 2021, CHCT stock actually hit a new all-time record intraday high of $43.57 per share. Now, it's been mostly downhill since then, though, with CHCT stock covering near a multi-year low of $14.64 per share. Despite the big 17% year-to-date decline in its share price, the outlook remains bright for Community Healthcare Trust, with Wall Street analysts providing a 12-month share price target range of $19 to $25 per share.
John, what can you tell us about Community Healthcare?
Community Healthcare Trust is a healthcare REIT that owns and acquires real estate property that is leased to hospitals, doctors, healthcare systems, and other healthcare service providers. The company's $1.2 billion portfolio consists of 200 properties across 36 states, covering 4.46 million square feet. It's a lot. Put that into perspective, that's equivalent to more than 78 NFL football fields. Its biggest holdings are in Texas, which accounts for almost 17% of its portfolio, followed by Illinois, Ohio, and Florida. The properties are 90.7% occupied, with lease expirations ranging from 2025 through 2045. By property type, medical office accounts for 36.3% of the portfolio, followed by inpatient rehabilitation facilities, acute inpatient behavioural, and specialty center. Plus side, no single tenant accounts for more than 8.8% of total annualized rent. That's a good thing, because some tenants struggle to pay their rent during the pandemic and continue to, and that can, of course, weigh on earnings.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. Now back to the video. And Wall Street is bullish on community healthcare earnings.
Yeah, in the second quarter, on June 30th, Community Healthcare announced that revenue increased 5.7% to $29 million. The net loss increased to $12.5 million, or 50 cents per share, from the second quarter 2024 net loss of $10.4 million, or a loss of 42 cents per share. Now, funds from operations, or FFO, which is a figure used by REITs to describe cash flow from operations, were 23 cents per share, compared to 43 cents per share in the same prior year period. And adjusted FFO totaled 50 cents, and that was down slightly from 53 cents per share in the second quarter of 2024. Now, the company didn't provide any guidance for the rest of the year or 2026, but Wall Street has, and it sees the company turning a corner. After posting a 2024 net loss of 23 cents per share, analysts expect it to inch up to a loss of 24 cents per share in 2025 before ripping higher to 45 cents per share in 2026.
And on the passive income front, it has raised its dividend every quarter since its inception in 2015.
But yeah, returning value to shareholders is obviously an important part to Community Healthcare's business, and not just because it legally has to distribute 90% of its taxable earnings. Community Healthcare has increased its payout, as you noted, every quarter since its inception in 2015, even when the company's stock was decimated during the 2020 health crisis, gave its shareholders a raise. And despite a falling share price, continues to every quarter. Back in the third quarter of 2015, it paid out to 0.1420 cents per share. Fast forward to the second quarter of 2025, and it paid out 0.4725 cents per share. That represents a 10-year dividend payout increase of 232%. Now, the current forward payout translates into an annual distribution of $1.80 per share for a forward dividend yield of 13.2%.
John, thank you so much for your insights. Community Healthcare Trust, Inc. is a REIT with a growing and diversified portfolio of healthcare properties across 36 states. Unfortunately, its share price has held back for the most part, but by higher interest rates. The fact is, over the last number of years, its financials have been solid. Since 2021, its total revenue have grown from $90.5 million to $115.7 million, with operating cash flow hovering around $58 million. Free cash flow increased in 2022 to $49.9 million, but has trended lower since, coming in at $34.2 million in 2024. Over the trailing 12 months, free cash flow is around $36.4 million. It's a strong balance sheet, expanding portfolio, and reliable growing dividend have attracted some of the biggest investors on Wall Street. Currently, 261 institutions account for 85.73% of all outstanding shares. Two top holders are BlackRock and Vanguard Group. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.